Hey guys, welcome to another episode of the Avoiding Broke podcast with me, Jermaine.
And me, Leanne.
Really glad to be with you this week. So the three things that we want to talk to you about this week are the situation facing the younger generation in the midst of this whole COVID crisis, and thinking about some of the tactics that they can employ to maybe help put themselves in a better position. We want to think a little bit about household debt.
Yeah.
So there's a lot happening at the minute in terms of the amount of debt households have got, how we're managing that debt, and we just want to cover a few different ways in which you can try to, improve the way you're managing that household debt and a few different ideas we've got. And then of course there's an item from last week that we didn't quite cover around housing and the change in stamp duty land tax that recently came in. So we just want to think about a few different ideas for what that means for people and share some of our thinking about just opportunities in this environment. So just let's touch on then the young and unemployed, right? So there was an article that came out from the BBC this week, and there's been analysis done before that said that young people are most likely to be impacted by the effects of furlough.
Yes.
The outlook for young people's unemployment is quite bleak because a lot of big employers are not hiring as aggressively as they were. I think the obviously you've had the whole disruption in national education systems. I don't even know if exams are still being sat. I think there's quite a bit of variance. And effectively, parents are homeschooling and students are being expected to run themselves. If you were a youngster in that situation, firstly, how would you be feeling? Or how would you be feeling and what kind of things would you want to be doing?
I can take those 2 points. So firstly, how would I be feeling? I think maybe a bit anxious because everything that you thought you would maybe be going into has kind of changed because of COVID. You may have had plans and they may not come to fruition. So given that, what would I then be doing? I'd be looking, I think, to get a bit creative, try and think outside the box. Is there anything else that I could be doing that I'm not doing? Because I think you kind of want to give yourself an opportunity to get some different experience and maybe just stand out a bit.
Okay.
In there. So
you're thinking of work experience?
I'm thinking of a couple of things. I'm thinking of work experience. If there's places where you can go and work and get that experience, then that sounds great. Also, I think if there's some extra training that you could do, I think we spoke before about free online courses and things like that. So that's obviously something you can do to help yourself. I
agree with that. So the kind of real tactics that if I were in that same situation that I'd be looking at doing right now. So the gateway into many jobs is to have a good CV. So whatever stage of life you're in, whatever experience you've got, having a great CV is one of the key ways that you put yourself in the shop door. I think that's the crucial thing that everybody needs to be investing some time in whilst they've got the time. And I actually think it's probably something that is worth us doing a bit of a tutorial on, just to give a sense of how the whole CV landscape has kind of maybe changed throughout our professional experience, and then thinking about what good could look like in the current environment, and maybe share some resources to try and help people a little bit, because that anybody frankly benefits from having a good CV, but particularly if you're young now, you may not have the experience of doing it.
I think that's an excellent idea because it is your first impression to an employer. So if you get that right, then that can be a big win.
Absolutely, at any level.
Yes, for anyone.
Right. The other thing I'd think that is worth doing is thinking about how to kind of create a presence for yourself online constructively. So things like LinkedIn, which are still huge networking and recruitment tools. I think also I'm seeing a bit of a shift towards people who can demonstrate their interest in their field or their passions via some kind of online profile. Essentially, communication is really moving a lot more online. I think things like YouTube channels, whilst YouTube is huge and is the most consumed content in the world, there are still a lot of really creative ways to use photography, videography to actually showcase your skills and interests. And I think now's a really good time to be learning that if you don't have those skills already.
Yeah, I completely agree with that. And I think you made an interesting point about LinkedIn actually, because there's just so much you can learn there as well, and you can get connections for people, and I'm sure lots of people are willing to have chats with you, and so just take those opportunities to connect with people.
That's a good shout, and you can start by connecting with us if you want.
Yeah, you can.
And we'll be happy to. We'd love to get your questions, comments, and any feedback as well. And I think the last point that I'd be making is how you really then drive for getting a job. So, one of the things that I know was available, certainly in uni time. So if you're in higher education, there were often chances to go and say do placement years. So to go and work in places, to actually go and get that practical experience. Or if you were on a vacation, not only could you go and get internships, but you could go and do all kinds of other jobs that have got transferable skills. And it could be the most random stuff. So, if I look back at when I was in uni, the jobs that I've had include being a cleaner at the airport. I've worked in Oxfam, Summerfield, Sainsbury's. I did some work experience with a judge in a law centre. I think I've pretty much done everything other than what my career is in. But all of those things, all of those experiences gave huge amounts of transferable skills. And so sometimes it's the least obvious jobs that actually can give you some tremendous experiences. So you should always be thinking creatively, think outside the box, and keep your mind in that place that says, if you are out there engaging in the economy, then you are doing something that you can leverage to help you out in different endeavours.
Yeah, to me that sounds great. I think you've really summarised it well there.
Awesome. All right, so that's what we're thinking about the young and unemployed. So let's think a little bit about household debt now. So typically, obviously levels of household debt vary quite a lot. Typically, when you're talking about household debt, we're often thinking about slightly older demographics, but we don't want to. Obviously, anyone can be in debt at any point, provided you've got the relevant instrument. When you look at everything that you're picking up, what is your feel for where we are in terms of household debt and what we should be doing right now? How should we be thinking about our household debt? How to manage it?
So I think the first thing that you need to do is you need to get the information, and I think that comes back to looking at how much you're actually spending each month on your debt, whether that's loans or credit card bills, those different things. If you don't understand exactly what you have and how much you're paying out, then I think that's the first step. I think you need to get a handle on that information first.
Okay.
So then once you've got that, then you can see what position you're in, you can see what your income is and how you're actually managing that debt. And then you also need to get the information, I think, about the terms that you have left on your debt. Because you may be close to paying some of it off. Some of it you may just be able to pay off and take it off of your mind, get one thing off of your mind there.
Imagine if somebody who's consuming our content, who's listening, looks and says, well, I know I've got debt. I know I'm not earning enough to really service it effectively. So they really think that they're in a bad position.
Yeah.
What kind of things could they be doing? How would you be thinking, if you're in that position, how would you be thinking through it? What tactics would you be using to kind of put yourself in a better position right now?
I know that I've said it before, but I think it really does come down to budget. This is all about thinking about what your income is and how much of your income you're spending each month on those core essentials, those things that you have to pay. And your debt is one of those things that really you have to pay. So I think it just comes down to having a good budget, going through things forensically and knowing exactly what you have. And if it's the case that you've got expenses that you can trim in some areas because they're not core expenses and you may be kind of leaking money somewhere, this is the time, if you're thinking about your debt, that you need to plug those leaks.
I think that's a good point. I mean, it's funny. It's a bit like in the Avoiding Broke book, we talk about a bit like if you're trying to lose weight. And you can't out-train a bad diet, as they say. It's like no matter what situation you're in, there are certain fundamentals that you've simply got to nail in order to have a chance. So if you're trying to lose weight, it's your diet. Or I'm an Arsenal fan, right? So if you're looking at the Arsenal, you've got to fix the defence. It doesn't matter what scenario you're looking at. You've got to do certain fundamentals.
Yes.
That really drive the outcomes you're going to get. One of the points you made, you spoke about understanding the terms behind your debt and understanding the position. I mean, so that one thing that I think has been really interesting, that everybody should just keep an open mind on, is the ability to get relief if you are struggling. So we saw, for example, payment holidays being introduced for people who were who had mortgages, who couldn't afford to pay their mortgages. I'm quite sure similar arrangements have been put in place for anybody who's got credit card debt. And if it's credit card debt, I'm taking it that would extend to unsecured loans and overdrafts. It's worth checking out, but I'm not entirely certain on that point. But where we've got the ability to speak to our lenders, and this is the key thing, where we've got the ability to speak to our lenders to let them know that we are in a challenging situation, and on the lender specific basis understand what level of help and relief they will be able to give, because that level of help and relief will vary depending on your lender. But you might be in a situation where you are really struggling. You are furloughed, so you've lost 20% of your income. You can't now meet your basic essential spend, and your lender may really be able to give you a lot of help, but it may be a phone call away.
Yeah, I think you've made such a good point there, that you need to speak to people. You need to get information, and speaking to your lender is a key one. The other one that's just come to mind is that there are also kind of good websites out there that can help you, such as like the Money Advice Service, those kind of things that can help you if you are really struggling. Then the best thing to do, I think, is what you've said, which is to get help.
Okay, good.
Don't struggle on.
And I just to briefly close out with a few specific, if it were me, a few specific things that I would do just in terms of managing my household debt. So straight away, for anything that I consider to be essential spend, mortgages, rent, credit commitments that you have to pay on a regular basis, and that can include things like internet, mobile phone, because having a phone and having the internet is arguably essential. Paid for TV like Sky, there's a question mark, but there are some things that are essential. Some people need a car, for example. I would be looking at price comparison websites for everything that allows me to have a look and see where switching may be available. So, for example, if you've got high credit card debt, you may be able to switch to a 0% deal, and you can quite easily go online and find potential options that you might be able to look into. When you're looking at your utilities, so gas, electric, water, maybe get more so gas and electric, you can easily go online, again, do price comparison, and you can actually just... The websites often contain links for them to initiate the switching process for you. So it's actually relatively it's not very labour intensive. Can easily be done. I'd be on the phone to all lenders. And I think where you've got those finance commitments, so be it personal loans, credit cards, car finance, might be mortgages. If you're really struggling, and particularly if you've been impacted by furlough, for me, these are the kind of questions that you should be asking, because it's often better to have the open communication, understand what help may be available, and take it before you're struggling, as opposed to the other option, which is to often get into a position where you're really struggling, and then you're kind of clambering a little bit and treading water. I
think that's true, and you have to think about the impact that then has on your health and your mental health if you are in that situation. So getting the help is crucial. 100%. One of the key things that we always talk about with avoiding broke is it's not just about money. We massively need to be able to take care of ourselves mentally, look after our well-being during this time, and part of that means alleviating some of the pressures that can be caused from having financial worry. It's one of the big things that we're really keen on, so I think it's absolutely central to everything that we're doing here. And then the last bit I'd bolt on is, if you are in a position to be managing your debt sensibly, one interesting thing is then to think about your buffer as well. Because, a big ability for us to avoid broke in the truest sense is to make sure we can absorb shocks, make sure we can absorb surprises. So by a buffer, you mean a pot of money that you have set aside that you can then use if you need to? Absolutely.
That's money it's like a rainy day fund. Yeah. There is no committed spend associated with it. That's like your insurance policy. People have different levels of buffer, and they use a buffer, and they hold their buffer in different ways. But let's just, for the sake of ease, just think about pure cash buffer to meet your essential spend. I think you always can hear different opinions about what constitutes a good level. 3 months income, 6 months. for me, the figures are somewhat arbitrary. You should have a number that you feel you are comfortable. For me, that you can actually sleep well in the event of a shock. And if you were to receive a financial shock, so say for example you were on furlough, you could still continue to meet your key commitments whilst you are looking at alternatives to maybe supplementing your income, or if you were to decide that your 80% wage were to be sustainable, that you could exist on that money without undue burden. I think as you move out of a furlough period, then the question becomes slightly different, what your buffer looks like then. Because for anybody, for example, who is not furloughed, you have to think about the buffer slightly differently. And I think it's maybe not a discussion for this podcast, but one that we can pick up in a bit more detail later. But I think having that pot of money that you know is there to help you in the case of the unknown is really important.
I agree. And I think what's kind of coming out of this discussion about household debt for us is that everyone's going to have their own unique position. So it's about thinking about where you currently are and then what are the best next steps for you.
100%. And I think for anyone who's not in the position yet where they are running a household, so say for example for some of our younger audience, now is a fantastic time to start building that rainy day fund. You know, there is a lot written about the importance of what's called the compound effect, for the ability for money to grow upon money. The earlier you start saving and the more consistently you do it. And I think for anyone who's not currently running a household, who doesn't currently have those commitments, start thinking about that buffer right now. Because it's a lovely thing to be in a position where if you need it, you've already got it. Fair?
Very fair.
Awesome.
Definitely.
All right then, so why don't we jump into the third topic that we wanted to cover around housing and the changes in stamp duty, land tax. Do you want to outline some of the key points quickly?
So I think in terms of, I'll go through the stamp duty and the changes there. So what's happened is stamp duty is a tax that you pay when you buy a house, and it's a percentage of the price that you paid for the house that you would pay. So previously you'd pay nothing on the first £125,000, whereas now that has been increased to the first £500,000. So that's a big change.
Yeah, and that's if you're buying as your primary residence,
yes.
As opposed to buying investment property. And so what we wanted to just do in this segment was just think very specifically about anybody who is either say a first-time buyer who's looking to get onto the market because they're going to have different considerations, as well as somebody who's just looking to transact on their primary residence. So we're not going to go into the investments portion for this podcast. We can go into it a bit later maybe. But just take me through maybe first-time buyers first. What do you make of the stamp duty changes?
So I think if you are thinking about buying a house and you've been saving for your deposit, or you have your deposit money there and you're kind of ready, you were ready to strike, say you're ready to strike pre-COVID, then this is kind of a great bonus for you because you were already ready for that and now you're going to make that saving. If you were, say, close to being ready to buy a house, then this may then help you get yourself into a position to be ready a bit earlier because you've got that saving there on the stamp duty. But I would say with all of this, I think when I'm thinking about houses and stamp duty and mortgages and things like that, my number one thing that I always go to is to get some advice.
Mm-hmm.
There are people out there, I think of mortgage brokers when I think of this, that you can call them, I think, no matter what stage you are about thinking about buying a house, and they will give you excellent information to help you. Absolutely,
100%. So that is absolutely crucial. The property market and being able to purchase property and knowing how much what you've got as a deposit, how much it actually enables you to buy. It's a really complex field, and it's something where getting the specialist advice is always crucial to make sure that what you're looking at is the most accurate. I think for us, where we're not giving advice on the market, but we can give our views on some of the considerations. I think it was interesting that you said that this could be a good time to strike for people who are first-time buyers, because they may get they may get an added bonus of basically being able to buy more expensive property and potentially pay less stamp duty.
Yes.
But one of the questions I would have is whether or not this is even the right time to buy. I mean, what do you think?
I think that's such a good question, and I think it's going to really depend on the individual person. It's going to be the right time for some people, but maybe not the right time for others. And I think that's where, if you're thinking about why you're buying a property, if you're buying a property because you want it to be your house, you plan to stay there for a long time and things like that, then you may not really worry too much right now about house price changes because you're seeing it as a long-term investment. If you're looking to, say, buy a property now and then move again in a year or 2 years, you're trying to move up the ladder, then you'll have, I think, more of an eye on what's happening to house prices. And you may be thinking, if house prices do fall, then I don't want to be buying when it's more expensive now.
So, I mean, my take on it, right, is I think if you're a first-time buyer, property is such a big commitment, right? You're spending a huge amount of money and you're taking on a huge personal commitment.
Yes.
My view is you should always be grounded in understanding how the market actually functions. So I think you made an interesting point where you said you could look at buying a property as you could be thinking about things long term, or you could be thinking about 1 or 2 years out. The reality for the vast majority of us is that we never quite know. You could easily buy a 1-bed flat and think that you're going to and be thinking in one way, but then find out that you're expecting triplets, and all of a sudden, yeah, of course, but it's the reality.
It is the reality.
You know, so the way I would be saying, what I'd be saying to first time buyers here, if we're just really thinking about the tactics to go through this, I would be saying educate yourself on what is called the property cycle. There is a lot written, and we'd definitely encourage you go and just Google this about the property cycle. The theory about the property cycle in very simple terms is that the price of property goes up and down over cycles over a number of years. And so if you take, they often give the example of an 18-year period, you can see a lot of variance and changes in property prices. And one very important point that I always take from the property cycle is that property cycles are often characterized by periods of boom,
yes,
and then a period of depression. So periods of boom where prices are rising, and periods of economic depression or recession whereby prices drop. The key thing that people who understand the cycle will talk about is that you don't want to buy at a peak and then see whatever you're buying falling. And so for me, when you look at this kind of environment where we hear a lot about economic challenges, I think one key tactic, particularly if you're a first-time buyer, so you're not that experienced, and you're committing a lot of money up front, but you don't necessarily have any equity. You don't have any equity
yes,
behind you, is to understand the cycle and come up with your view about where you think we are, what your outlook for the property market really is, and then try to make an informed decision that you feel comfortable about why you may choose to enter the market at a point in time, or why you may choose to wait.
I think that's a great point. And there is information that you can get out there which does show you how house prices have changed over time.
Lots of good stuff, yeah.
For example, Rightmove and Zoopla do that.
Lots of good stuff. You know, with everything that we cover, you know, I would always encourage anyone to just jump onto Google and YouTube as a start point and actually just put these things in. You know, put the terms in and absorb some of the quality information. We're going to try and be doing more ourselves on the YouTube platform, just to try and help make sure there is enough good quality info out there. But one of the key things for me with property, and it's a big area of interest for us, is having the knowledge and the grounding about how the dynamics of the market work. I would say we should very rarely, if ever, be going in thinking, not being mindful of how property cycles work, and having our own view about where we think we are.
Yes.
I think that thinking should always ground what we decide to do.
Oh, I completely agree with that.
You know, but I do think on your point about if you are looking to enter the market now anyway, you may have got a big win.
Yes, on the stamp.
Because on the stamp duty, because obviously paying less in stamp duty can potentially translate into more money that you can spend on the property itself, or money that you can spend on repairs or decorations and furnishings.
Yeah, there are other associated costs, aren't there?
Other associated costs, 100%.
Yeah.
So talk to me then about somebody who owns their property. They may have some equity in it. What are some of the interesting things that you're thinking about there?
So with these people, so you've got your property, you've got some equity, and you're thinking about moving. You may want to consider selling now if you were going to anyway, because you may want to release that equity, because I think you only release it if you're selling when you sell. And so if you want to lock in that equity, then putting your house on the market now may be a strategy that you want to consider.
Yeah, I think we're seeing a little bit of that. So, equity in housing is it's a paper gain until you've sold it, right? So, it seems like there have been some interesting options now, because you've got people who choose to put their house on the market now, and as you say, you choose, if depending on where you think you are in the cycle, if you think we've got to a peak but we could be seeing a drop in house prices, then if you've got a property that's worth currently say 500,000 and you're trying to protect yourself against a potential drop to say 450, then you might be trying to sell your property now.
Yes.
But for those people, they still need somewhere to live. So what do? Do they go straight into the market themselves?
Well, you have options. You can go straight into the market yourself and buy the house that you want to. But you also have options if it's available to move in with family and see what happens to house prices. If they stay where they are now, then you haven't lost anything. If house prices fall, then actually you can get more than for your money that you've released by selling your house.
That's true. And I like those latter options. Because I think with property, and my personal opinion is that there is a lot of value to be had in waiting at the minute. I think where you've got a lot of uncertainty in any area, there can always be value in moving quickly.
Yes.
But equally, being able to hold off a little bit, wait and weigh up what your options actually are, let the dust settle a little bit. We spoke last week about how post the end of the government's furlough contributions, how the economy itself may shift quite a bit. And what we're picking up is obviously that there are a lot of movements in the macroeconomy, global economy, on a daily basis. I think the option to actually to sell and wait is a really interesting one. It's not one that we always think of.
No.
It's not one that we always think of. But I think if it were me looking to be active in the market right now, I'd be thinking, let's see what the other alternatives are, because sometimes you can put yourself in a really strong, interesting position when you've got a pile of cash that you may have received from selling a property, but when you're actually operating in a less favourable market, so a market post a dip.
Yes, I'm completely with you on that. I think if you have those options, they're definitely worth considering, and it's worth trying to think about what options you do have and try and set them all out.
100%. And so I guess just to kind of summarise the two kind of tactics that we're finding particularly interesting in our discussions at the minute. If you are a first-time buyer, now is a great time to start educating yourself on how the dynamics of the housing market really work, understanding things like property cycles, shaping your view about where you think you are in the cycle, and assessing what options you may have by not only doing that kind of research, but also speaking to brokers who can then help you understand basically how far your money can go and what it can really get you. Because I think it's a great logic to look at where your money goes and then think about what the property looks, and then think about what property fits within that.
Yes.
But what you may also find, obviously, over time, is that a property worth 400k may all of a sudden drop to 300, 350, and what was previously out of reach may become in reach. So that's why it's always useful to kind of look at property above what you're setting as your target, and then actually just monitoring the market to see how things actually move. And then just to summarise our point then on the current homeowner, you jump in if I got any of this wrong. So summarise our point on the current homeowner. If you've maybe made some paper gains, whereby you may have equity sitting in your property, but it's obviously not been realised because maybe you've not refinanced. Actually, there are some really interesting thoughts that you could be having about either refinancing or putting yourself on the market in order to start realising some of that equity, and maybe even waiting if that's an option for you.
Yeah.
You know, I've heard and seen. So there it is, guys. It's been we've covered the young, furloughed and unemployed. We've covered some thoughts on household debt, and we've covered some thoughts on the housing market. So hopefully you found this a really interesting and informative podcast. It's been really our pleasure to keep sharing this information with you. And if you like what you're hearing, please do drop us some feedback and let us know. If you have any questions or comments, you can connect with us on all major social media platforms, and we'll put links in the podcast. So we'd love to again receive the information from you. And if you want to connect with us on YouTube, if you're watching this on YouTube, then we'll obviously put some links in the below as well. So you can leave any comments for us, as we'd really love to hear what you're thinking about the content, what questions you have. Please do like and share as well if you're finding great value from this. Okay, Pup, anything from you?
No, just to say, as Jermaine said, we really, really would just love to hear from you. So do get in touch.
Lovely. All right, guys, been our pleasure. Take care. Speak soon.
Bye.
Bye-bye.